Most people think money comes from hard work, taxes, or maybe gold locked in a vault. But what if I told you most money is created out of nothing with a few keystrokes, and this quiet process is the real reason prices keep rising while salaries struggle to keep up? This isn't a conspiracy, it's how the modern money system actually works. Imagine waking up one morning and finding that the value of your savings has quietly shrunk. You still have the same number in your bank account, but everything around you costs more: food, rent, fuel, education. No one stole your money directly, yet it feels like something was taken from you, that something is purchasing power. To understand why this keeps happening, we need to talk about how money is really created today, and it's not how most people think. In the past, money was tied to physical things: gold, silver, or commodities with real limits. If a government wanted more money, it needed more metal. That system had its flaws, but it had one powerful restriction. Money was hard to create, that restriction no longer exists. Today, money is mostly digital, numbers on screens, and the majority of it isn't printed by governments. It's created by commercial banks. When a bank gives out a loan, it doesn't hand over money that someone else deposited. Instead, the bank creates new money at that very moment. A loan is issued, numbers appear in your account, and suddenly the money supply has increased. This is legal, this is normal. And this is how most money enters the economy. Think about it. Every mortgage, every business loan, every car loan, and every credit card balance adds new money into the system. When the creation of loans outpaces the production of real goods and services, more money starts chasing the same things, and that's when prices rise. Inflation isn't just about greedy companies or supply shortages. Those factors can certainly make it worse, but the core issue is simple. When the supply of money grows faster than the creation of value, money loses its strength. Now, governments and central banks know this, so why do they keep allowing it? Because debt has become the foundation of the modern economy. Governments borrow to fund spending, businesses borrow to expand, and consumers borrow just to get by. If money creation suddenly stopped, the entire system would slow down or even collapse. So instead, central banks try to manage the pain. They raise interest rates to slow down borrowing. Then they lower them to stimulate growth. Over and over again, it's like they're tapping the brakes and the gas at the same time, trying to keep the car moving without crashing. But here's the part most people miss: inflation doesn't hit everyone equally. The people closest to the newly created money banks, financial institutions, large corporations, and major asset owners, they benefit first. They receive the money before prices have fully adjusted. They use it to buy up assets like stocks and property. By the time that new money trickles down to wages and everyday workers, prices have already risen. This is why you see asset prices, like real estate and the stock market, often rise much faster than salaries. It's not an accident. It's a structural feature of the system. Your money loses value not because you failed, but because the system is designed around constant expansion. And this leads to a dangerous habit. Whenever there's a crisis, a recession, a market crash, a pandemic, a financial panic, the solution is almost always the same: create more money, more stimulus, more liquidity. It works in the short term. Markets calm down. Businesses are saved, governments avoid unrest, but the cost is always pushed into the future. Each crisis cycle leaves behind more debt, more money in the system, and less purchasing power for everyone holding that money. That's why so many people feel like they're running faster and faster on a treadmill but going nowhere. Now, for the uncomfortable truth: inflation isn't a bug in the system, it's a feature. A slow, steady erosion of your money's value encourages you to spend it rather than save it. It pushes people into taking on more risk with their investments just to try and stay afloat. And for governments with massive debts, inflation quietly reduces the real burden of what they owe. But for ordinary people, it just feels like life is getting harder for no clear reason. This is also why alternative systems keep gaining attention. Things like gold, Bitcoin, and other real assets. Anything with a limited supply. People aren't just chasing profits, they are trying to find an escape from the constant dilution of their money. Whether these alternatives succeed or fail isn't really the point. The point is what this search represents: a crisis of trust. Trust in money depends on the belief that its value will hold. Once that belief weakens, people start asking dangerous questions. If money can be created endlessly, what is it really worth? If prices are always going to rise, is saving even a rational thing to do? And if debt is what fuels the entire system, who actually benefits in the long run? These questions don't have easy answers, but understanding how money is created gives you something incredibly powerful: clarity. You can stop blaming yourself for systemic problems. You can stop thinking that inflation is just a random event. You start seeing the patterns, and once you see them, you realize something important. The game isn't just about how much money you earn, it's about understanding how money itself works. Those who understand this system can adapt. They can take steps to protect their purchasing power. They can think long term and avoid panicking at every headline. Those who don't understand are forced to constantly react, always one step behind. This channel exists for one reason: to help you understand the systems that quietly shape your life, not to scare you, not to sell you anything, but to replace confusion with understanding. Because in a world where money is created with keystrokes, knowledge might be the most valuable asset you can possibly have. Thanks for watching. If you found this valuable, consider subscribing for more insights into how the world really works.